market news now. Stocks in Asia declined as an unexpectedly strong U.S. jobs report raised the prospects of more rate hikes from the Federal Reserve. Concern over U.S.-China geopolitical tensions also weighed on sentiment. This week, a host of Fed officials are set to speak, led by Jerome Powell tomorrow, and the tone could be hawkish. We also have policymakers from the European Central Bank and the Bank of England who will also be making appearances. Locally, building materials retailer Cashbuild wants to cut down on administrative costs by proposing an odd lot offer to its shareholders. This is when a company offers to buy back its own shares from shareholders owning fewer than 100 shares, and is sometimes done to simplify the ownership structure. This type of offer also gives odd lot shareholders the opportunity to sell their stake without suffering dealing charges, which might otherwise make it impractical for them to do so. Nonetheless, to talk to us about the latest when it comes to the market and also preview what we can expect this coming week, we are joined by Gary Boyson, who's a portfolio manager at Rand Swiss. Gary, thank you so much for your time. We're kicking off a brand new week following the month of January when we saw that rally. What's the current market sentiment for February?
Well, I suppose I want to say the market sentiment is pretty negative, just because we've got the all-share index down over 1%. We've seen a lot of suffering in the resource index. That's down over 2%. So you feel like it's pretty negative. If you actually have a look at the volatility index, if you have a look at some other measures of market sentiment, people are still actually very optimistic. So there's a wonderful fear and greed index that still says everyone is very greedy. And this is obviously coming on the back of this absolutely stellar January that we've had, where we've seen lifts in equity markets. We've seen a currency that's firming up. But as February unrolls, and February is statistically a fairly negative month for markets, we are starting to see that unwind. So yes, I think people are still quite optimistic. On the offshore markets, there's been a key break of a trend line. But that strong payrolls report on Friday just sent a shockwave through the market. We saw the dollar starting to strengthen. So we've got Rand dollar now sitting at about 17.61 as that dollar keeps strengthening. We're also losing a little bit of ground against the euro and the pound as well. So South African Rand on the back foot, a little bit of risk off trade creeping into what otherwise has been a very positive year.
So let's touch on that strong jobs report. What does it mean then for the Fed? Because I think we're coming back to that narrative of good news being bad news.
Okay, there's no question. It was fantastic news if you work in the US. The labor market is incredibly strong. It's the strongest unemployment figure if you look at the headline unemployment number, which dropped to 3.4%. Since May of 1969. It's a 53-year high in terms of the employment rate. We saw leisure and hospitality adding around 128,000 jobs. Total we had 517,000 jobs added. That is a massive, massive number when the expectation was only 187,000 jobs to be added. So the US labor market's still in an incredibly strong position. Now, as you say, sometimes good numbers are bad numbers when it comes to financial markets, though. So what this means is that the idea that we might see a more dovish Fed, a Fed that might cut interest rates sooner rather than later, maybe looks like it's no longer on the cards. Potentially, they might have to essentially leave interest rates a little bit higher because that job market is so hot. The sense that we're getting, in our discussions is that, the US labor force, so the average worker in the US, actually has a lot of bargaining power because that unemployment rate is so strong. Yet they're not actually asking for increases because they're afraid. They've got these pictures of recession and they're starting to think, I'd rather hang on to the job. But at some point that turns around. And if we do start seeing, increased wage demands in the US, that's going to feed into inflation. And suddenly this benign inflation picture that we had painted for us, by the Fed last Wednesday, suddenly goes out the window. And then suddenly we're not looking at interest rate cuts towards the end of the year. And we're looking potentially at a higher terminal rate as well. So we're looking at maybe even further increases in the interest rate in the US. That obviously sent the dollar surging. So we've had the dollar index all the way up to 103. Which is a measure of the dollar against its major trading partners, and everything that's priced in dollars falling. So we've had gold falling, we've had Brent crude oil falling, Brent crude oil now at $80 a barrel, and really anything that is priced in dollars suddenly looking unattractive just because of that resurgent dollar.
So we've got about a couple of minutes left to this interview, but I want to talk the MTN story where they finally had the Ghanaian tax authorities withdrawing that 13 billion rand tax claim. Lessons here for the investors who have a little bit of exposure to the telecom sector, particularly in South Africa. What are some of the lessons you can learn here?
Well, certainly, if you look at the telco sector in South Africa, MTN is always going to be your more risky play. It operates in countries like Nigeria and Ghana, and it's had significant challenges because these territories are a lot more risky than South Africa. So a player like Vodacom obviously operating in a much sounder area, but obviously fantastic news for the company. So the Ghanaian authorities, with a slight intervention from the South African Ministry of Foreign Affairs, walking back their claim of 11.7 billion rand in back taxes and penalties. So, obviously very, very good for MTN shareholders. It's one of the reasons that we're seeing on a negative day that MTN is up over 1% on the announcement. And I think if you look at MTN, yes, it is operating in a more risky jurisdictions. But if you look at MTN Ghana, for example, South Africa is an important investor in Ghana. So, while this was a risk item for the company, I mean, we've got over 170 projects. We've invested, I think, 25 billion rand plus in capex into the Ghanaian economy. We employ, South African companies employ around 20,000 Ghanaian people. So there's a give and take. And whenever you're operating in a foreign jurisdiction, yes, you've got to play by their rules, but if you're bringing a lot as a country, sometimes you can intervene, and occasionally these things get walked back, and obviously very good news for shareholders.
Just under a minute left. Quickly, an event you're keeping an eye on for the week?
Well, it's not the week. I suppose this week, we'll keep looking at U.S. earnings season as it continues to roll forward. British American Tobacco reporting, a couple of the dual listeds, which are going to be interesting for South African investors. But I think, the big risk events, for February still remain. One of the things that we are keeping a very, very close eye on at the moment is the idea of the Bank of Japan tightening monetary policy. So today we had new announcements of who is going to potentially replace Kuroda, their central bank chief. And this is a significant risk event, not just for the Japanese, it's for the globe. Japan is still the world's third largest economy, and they have an enormous debt to GDP.
Right.
And while the rest of the world has managed to tighten interest rates because of that large debt to GDP, they haven't been able to take the similar steps. So there are real concerns around the Japanese bond market, and this week and this month we're going to be keeping a very close eye on them.
All right, Gary, thank you so much for your time. That is Gary Boyson from Rand Swiss. And adding to that, a little bit later on in the week, we'll unpack what Japan's monetary policy stance has been, give you a bit of an economics lesson on the yield curve control policy that the Japanese, or at least the Bank of Japan, has implemented. But over the week, we've got some Fed presidents delivering their speeches, as well as U.S. earnings season. We'll unpack all of that for you. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.